collapse of hypermarket chains in China. Large supermarkets closing one after another. China's stock market fluctuates. Young people are stuck with loans for stock trading, and the market is wailing. The Ministry of Finance of the Communist Party of China has made a big move to borrow money to resolve local debts. The wave of bankruptcies and collapses of supermarket chains in China has not stopped. On October 10th, Yonghui Supermarket did not receive the capital transfer payment of 300 million yuan and demanded payment from Dalian Yujin, Wang Jianlin, and others. The case must be submitted to economic dispute arbitration pending judgment. Notably, on June 30th, Japanese department store Xi'an's Shanghai location officially closed after 27 years of serving the community. This closure is part of a wave affecting long-standing hypermarkets and large department stores in mainland China. Previously, the high-end City Shop supermarket chain in Shanghai closed. The foodie supermarket chain declared bankruptcy. The famous RT Mart supermarket chain shut down many stores nationwide. The third largest supermarket chain in China under the Suning Group closed most of its branches, and the long-standing Metro supermarket chain in Shanghai ceased operations. This marks a wave of closures and bankruptcies in the department store and supermarket industries, as well as e-commerce malls in mainland China. In recent years, China's department store industry has seen a wave of store closures. Many once popular and famous department stores in major cities across mainland China, such as Pacific Department Store, Xi'an, Parkson, Jibai, Ocean Department Store, and New World Department Store, have ceased operations and exited the market. On October 10th, Yonghui Supermarket issued an announcement stating that it had not yet received the fourth phase of the 300 million yuan equity transfer payment from Dalian Yujin, and had sent letters to Dalian Yujin, Wang Jianlin, Sun Xishuang, Yifang Group, etc., and would initiate arbitration to pursue the legal responsibilities of the aforementioned responsible parties. According to the announcement, in December last year, Dalian Yujin Trading Companies Ltd purchased 389 million shares of Dalian Wanda Commercial Management Group Commerce Ltd held by the company, corresponding to the number of shares held by the company before Wanda Commercial Management increased its capital and expanded its shares on August 25, 2023, accounting for 1.43% of Wanda Commercial Management's total share capital. The transfer price was 4.53 billion yuan to be paid in 8 installments. After this transfer, Yonghui Supermarket no longer holds shares in Wanda Commercial Management. In late July this year, Yonghui Supermarket signed the supplementary agreement to the transfer agreement with Dalian Yujin, Wang Jianlin, Sun Xishuang, and Yifang Group to adjust the payment plan, adding Wang Jianlin, Sun Xishuang, and Dalian Yifang Group Co. Ltd, hereinafter referred to as Yifang Group, as transaction guarantees, and agreed that the fourth phase of the equity transfer payment of 300 million yuan should be paid before September 30, 2024. As of the date of the announcement, October 10th, Yonghui Supermarket had not received the transfer payment, and the purchaser, Dalian Yujin, had not fulfilled its payment obligations as agreed, which constituted a breach of contract. Yonghui Supermarket said that it had issued a notice of accelerated maturity to Dalian Yujin, Wang Jianlin, Sun Xishuang, and Yifang Group, requiring Dalian Yujin to pay the money immediately and asking Wang Jianlin and others to assume joint and several guarantee liability. At the same time, it will file for arbitration with the Shanghai International Economic and Trade Arbitration Commission to investigate the legal responsibilities of Dalian Yujin, Wang Jianlin, Sun Xishuang, and Yifang Group. Shen Meng, director of Shangsong Capital, told Blue Whale News that for Yonghui, if the payment cannot be recovered smoothly as soon as possible, it will reduce its own operating liquidity and increase risks. For the defaulting party, it may have to pay a certain cash price for this. On October 10th, Yonghui Supermarket's stock price fell to the limit, and the latest price was 3.23 yuan per share. Tianyancha shows that Dalian Yujin was established in November 2023, with Shen Baisong as the legal representative, a registered capital of 500,000 yuan, and its only shareholder is Beijing Yifang Mingxi Information Technology Co., Ltd. The latter is 100% owned by Yifang Group, and Sun Xishuang is the chairman and general manager of Yifang Group and the actual controller. According to the Securities Times, Sun Xishuang has a deep connection with Wang Jianlin. As early as 2004, Dalian Yifang Group and Wanda cooperated to develop Beijing CBD Wanda Plaza. Subsequently, Wanda and Dalian Yifang Group jointly invested in cultural tourism projects such as Changbai Mountain International Tourism Resort, Dalian Jinshi International Cultural Tourism Zone, and Xishuangbana International Resort. China's stock market fluctuates, young people are stuck with loans for stock trading, and the market is wailing. After China's National Day holiday, China's stock market fluctuated and fell, leaving many young people stuck with loans for stock trading, and the market was wailing. The industry warned that investors should be prepared for a crash. Please see the report. Chinese people. Who would have thought that it was a bull market a day ago? I was up 90,000 yesterday and lost 140,000 today, including principal and interest. On Thursday, October 10th, China's three major A-share indices rose and fell, compared to the previous day. As of the close, the Shanghai Composite Index barely maintained at 3,301.93 points, an increase of 1.32%, while the Shenzhen Component Index fell by 0.82% and the Chinext Index dropped by 2.95%. The turnover of the Shanghai and Shenzhen stock markets that day was 214.3 billion yuan, a decrease of 796.4 billion yuan from the previous trading day. The sharp drop in the stock market on Wednesday dispelled the recent optimism of retail investors. The market was wailing, and stockholders lamented the difficulty of escaping the trap. Chinese young stockholders. Now I don't want to be rich, I just want to get out of the trap and get my money back. Why is it so difficult? What kind of market is this? It's really a one-way trip. At the end of September, after the Chinese Communist Party authorities launched so-called policies covering monetary easing, fiscal and stock market stimulus, the stock market soared, and many young investors rushed in, with some even borrowing money to trade stocks. However, due to the overall deterioration of China's economy and the lack of fundamental support, the stock market fluctuated after the October National Day holiday, causing millions of new stockholders to be trapped. Stock investment manager Zheng Shuguang. For retail investors, especially newcomers, in their minds, a bull market may mean a straight or diagonal rise, but in fact, it fluctuates repeatedly. Since the A-share market rose at the end of September, more than 100 companies have announced plans to reduce their holdings, and the main funds in the Shanghai and Shenzhen stock markets have also taken the opportunity to flee. Analysts believe that the current policy of the Communist Party of China is primarily to stimulate the stock market through monetary easing and supply restrictions, without fundamentally improving corporate or economic fundamentals. Retail investors should be very cautious when entering the market. Zheng Shuguang. I think for these new and old stock investors who do not understand companies, cannot read financial statements, are unwilling to study companies, and lack a good mentality, they should resolutely prevent themselves from entering the market. Nomura Securities recently issued a warning that after the stock market frenzy, a crash will follow. The current situation of the Chinese stock market is similar to that of the stock market in 2015. Investors should be prepared for a crash. Zheng Shuguang. As for this wave, in principle, it can basically be imagined that it is driven by monetary and fiscal stimulus, relying on the existing economic scale under these stimuli. The long-term prospects are very difficult. The Ministry of Finance of the Communist Party of China has made a big move to borrow money to resolve local debts. The Ministry of Finance recently issued a series of fiscal adjustment measures, preparing to address local debt risks supplement bank capital, stabilize the housing market, and protect people's livelihoods by expanding the issuance of bonds. Scholars believe that this major debt initiative is just an official operation of exchanging time for space, which has no effect on economic development. The Ministry of Finance held a press conference on October 12th. Minister Lan Fuan stated that this year's fiscal deficit is set at 4.06 trillion yuan, an increase of 180 billion yuan from the budget at the beginning of last year. The new local government special debt limit is 3.9 trillion yuan, an increase of 100 billion yuan from last year. This includes the special bonds that have been issued and those yet to be issued, totaling 2.3 trillion yuan, which can be used to drive local investment in the next 3 months. Epoch Times columnist Wang He noted that everyone is currently not optimistic about China's economy. What the Communist Party of China is doing now is trying to change public perception and restore confidence in the economy. Wang He commented, "From the press conference of the National Development and Reform Commission to this press conference of the Ministry of Finance, the goal is to address this issue. They want to reverse public expectations." The Ministry of Finance did not announce several major initiatives this time, but has laid the groundwork by significantly increasing the local debt limit, issuing special national bonds, enriching bank capital, and expanding the deficit. He believes that the Ministry of Finance has created illusions by presenting a grand vision and has used procrastination to maintain these illusions. David Huang, an economist living in the United States, stated, "According to modern monetary theory, the central government has the unlimited right to issue banknotes. The Communist Party's financial strategy aims to exercise this unlimited right and issue currency based on debt. This will likely lead to an increase in the deficit, severe inflation, and a potential liquidity trap." Huang pointed out that China fell into a liquidity trap in 2012 and 2013. He warned that this bond issuance can only solve the short-term debt problem. If the economic structure does not change, funds will not flow to the real economy or the private sector, worsening the situation in the future. Regarding local debt, Lan Fuan mentioned that the central government has arranged an additional 1.2 trillion yuan this year on top of last year's 2.2 trillion yuan local debt limit. David Huang expressed skepticism, stating that the Ministry of Finance's plan may not effectively resolve local debt issues and can only temporarily suppress the increase in local debt. Huang concluded, "In fact, the basic approach is to raise new debt to repay old debts, deferring the problem to the future, which is called exchanging time for space. If the economy flourishes in the future, the debt problem can be easily resolved. But if the economy does not improve, it will only increase debt risks and exacerbate the situation."